Our finances are one of the most intimate parts of our life. I can't tell you how many times as a bank manager, I've had clients that are coming in for an appointment, and either the wife or the husband will call in advance and say, listen, don't discuss that credit card I have. Today, I'm going to be talking about debt. I'm going to be talking about some solutions if you have debt. But most importantly, I'm going to be explaining debt consolidation. Debt goes beyond bank statements. It impacts health, peace of mind, and relationships, with money issues linked to 42% of UK divorces. Debt consolidation can ease stress and finances if used wisely. So I'll tell you the do's, the don'ts, the pros, the cons, but the success depends on how early you action things, honest conversations, and professional guidance. Make sure you watch all the way until the end because, as I said, I'll be going through the do's and don'ts. I'll be explaining some of the signs that you may need to consider debt consolidation. So my name is Anthony Lindsay, and I've been in finance for over 30 years. Now, one of the key things about my experience is I did debt collections and pre-litigation for about a decade. So I probably forgotten more about debt and collections and credit than most people know. The first thing that I would tell you, if you are struggling with debt, or if you feel that you may be struggling with debt, don't bury your head in the sand. I've spent over 30 years in finance, both in the US and in the UK, and I've seen how quickly things can spiral out of control. And it usually comes down to just a few key mistakes. It could be the loss of a job, health issues, just a few things can just make things all go wrong. But please do not bury your head in the sand. Warning signs that you may be slipping into debt. And you need to be aware of these warning signs because it can make sure that you do things in advance and don't wait until things get too serious. So relying on credit cards for everyday expenses. If when you're going to do the weekly shop, you're using a credit card and it's not part of a strategy, because sometimes people use a credit card that's 0% interest. It helps them budget. It helps them do the things that they need to do. Maybe they're getting air miles or they're getting some type of cash back. I'm not talking about that. I'm talking about not having enough money to do the things that you need to do and therefore using credit cards. That could be a sign that you're slipping into debt. Only making minimum payments. When you look at your credit card statement, it clearly will tell you somewhere in the fine print how long it will take for you to pay off that credit card if you keep making minimum payments. That's not a good strategy. You should always, if possible, try to pay the full balance or make overpayments. Have a plan to clear that credit card. So if you're only making minimum payments, you may be slipping into debt. Using new credit to pay off old credit. So you take out this loan to pay off another loan. And I'm not saying maybe you have a loan that's on 8, 9% and you're taking out a loan at 7%, or you're transferring debt onto a 0% interest credit card. Not talking about that. I'm talking about you just can't afford to do this thing, and therefore you're taking out another loan, which a lot of times won't help or won't work because your credit score might not support that. Bills piling up unpaid or they're late. No emergency savings. So people don't realize you should have 2 to 3 months worth of salary and expenses in a savings account. That way, if you hit a bump, you won't miss payments or make late payments. And stress, arguments, or avoiding money conversations. The conversation with your significant other is very important because being in debt can feel very lonely and it can be isolating and it can increase the stress on your relationship. So these are the warning signs that you're slipping into debt. If you see any of these things, it may be time for you to speak to a professional. Why the warning signs about slipping into debt are so important. So let's look at this. So debt doesn't stay still, it grows and it gets worse, it snowballs. So not opening your letters, avoiding the conversations is not a good strategy. It's not going to get better, it will only get worse. You'll stress over money and it often will damage relationships. As I said earlier, about 42% of divorces cite finances and money as one of the root causes. Missed payments can hurt your credit score for years. So it makes the things that you want to do in the future even more expensive. When I was just getting into finance as a younger person, I'd always say, well, it's not fair. Why, if I'm struggling, why are they charging me more for this interest rate? Well, it makes sense because the lender has more risk if you have a bad credit score. So to mitigate or cover that risk, they have to charge you more because it's more likely that a certain percentage of these people with bad credit are never going to pay back at all. So then that risk gets spread across everyone, but it really gets focused on the people that are in that bucket. The longer you wait, the fewer options you will have. This is another thing that I find that will happen with people. They feel themselves slipping into a situation where they're going to have problems. This is the time where they could have done the 0% interest transfer, or they could have done the debt consolidation loan. And they're like, no, it will be fine. I'm not going to talk to anybody. And they don't do anything then. And then when they've missed payments or have had late payments or have the CCJs, it's very difficult at that point to get the help that you might need. So look out for the warning signs, be proactive, don't avoid the conversations with a professional. I'm going to explain debt consolidation. So, debt consolidation, putting all the debts you already have in one place. So, it's combining multiple debts such as credit cards, personal loans, and overdrafts into a single, more manageable loan, sometimes secured against your home. We will be talking about debt consolidation for homeowners. If you're not a homeowner, a lot of the things that I'll be saying will not apply to you. You'll need to do a personal loan, which, if you've waited until too late, might not be possible. Keep in mind, you're not taking on new debt. Instead, you're restructuring the debt you already owe, usually at a lower interest rate and with one clear payment. I'm going to explain the difference between revolving credit and fixed term credit. A credit card is what they call revolving credit. So you can withdraw the money, you can use it, then you pay it off. Your minimum payment is a percentage of the total balance. It's not a fixed payment every month. And therefore, you don't have a fixed end date. And this can be part of the trap for a lot of people because they're able to make their monthly payments on their credit card. They feel that they don't have a problem, but they're only making the minimum payment. They're just renting the debt. And that's one of the things I learned when I worked in collection is that whole concept of you have a debt that you're renting because you owe £5,000. And by making the minimum payment, it's never really going down. So debt consolidation could be a route to securing a better future and reducing the stress both on you and in your relationship. Debt consolidation can help in several ways. So when can it help? When can debt consolidation help? To reduce the monthly outgoings by spreading payments over a longer term. So let's just say you owe £10,000 on a credit card and you're only paying the minimum payment each month. You might find that it would take 30 years to pay the whole thing off. By putting it on a fixed term loan, you may even do that over 15 years, but you know that there's a set time when that will be paid off and you're able to make fixed payments each month, which will help you with budgeting. To simplify finances with one clear payment. So if you have 4 credit cards, each of them you owe £5,000, 4 times 5 is 20. So now you take that £20,000 that you had spread across 4 credit cards, paying 4 different interest rates. You now put them on one loan, which will ideally, and you wouldn't do it if it wasn't the case, be on a lower interest rate. So the amount that you pay back will be less. It will reduce stress and improve stability. The stress that can be caused by not being able to make your payments each month, by the phone calls, by the letters, has a huge impact on your mental health and on your relationships. When I was working for one of the big banks, when I was working in collections, we actually had a phone number by our desk for Samaritans because quite often Well, often enough, you'd find people that are so stressed they're considering, doing the unthinkable. So we'd have to refer them to Samaritans. So you can reduce stress potentially by doing a consolidation loan. When used early, before missed payments, it can help you prevent yourself from damaging your credit. So you might actually have a good credit rating and good credit profile, but you're slipping into that place where it's all going to go wrong for you. So these are some of the times when debt consolidation can help you. When it might not be right. I'm going to explain a few times when debt consolidation might not be the right thing for you. If you've watched my videos, you know I don't sell. I explain, I give you pros and cons that you can be a more informed consumer. So the truth is, debt consolidation isn't the right thing for everyone. And here are some of the reasons why it might not be right. If you continue borrowing after the consolidation, so you risk ending up with more debt in a worse position. I've seen this happen so many times. When I was at another bank many years ago, there would be some clients that would come in, we'd consolidate debt, and then 3, 4 years later, they'd come right back in with even more debt. So that if you don't have a disciplined approach to money, debt consolidation may just be delaying the inevitable. First, you need to fix your relationship with money and make sure that you're being more responsible with how you spend your money. If a new loan is stretched too long, you may pay more interest. So look at the numbers, crunch the numbers, and make sure that it's going to put you in a better position, that you're not paying more in the long run. Secured loans put your home at risk if payments aren't made. So every mortgage broker will always say in all of their videos and in all their printed material that your home is at risk if you don't keep up the repayments on your mortgage. And in many cases, the consolidation loan will be a secured loan against your property. So it will be a second charge. You need to make sure that you keep up your payments. Fees, charges, or early repayment penalties can reduce the benefit. So you may have another loan that you're paying off that has an early repayment charge. So that's going to cost you money. You may have penalties. There's different things that can add up. So do the math. Don't just walk into it thinking debt consolidation is the best thing, because it might not be the best thing. Make sure you speak to a professional. When I make these videos, it's not to replace you speaking to a professional who is licensed, who you know, who you trust, and who can tell you what's best for you. Let's talk about the pros or the upside of debt consolidation. It can lower your monthly payments. So if you're paying out on high interest credit cards, you're servicing the debt, you're not making less payments, but you're never paying it down. By consolidating it into one loan on a lower interest rate with fixed payments, it can lower your monthly payment, especially if you've done the math and you select the right term for the consolidation loan. One payment instead of juggling multiple payments over multiple payment dates with different interest rates. You can have one loan that you know when it ends, you know how much the monthly payments are. It can potentially lower your interest rate, especially when moving from high interest credit cards. Why would you do a debt consolidation loan if it's not going to reduce the interest rate? One of the things that you should be speaking to the professional about is the math behind the decision to make sure it's going to save you money in the long run and protect your credit rating. The other So we've been talking about the pros of debt consolidation. The last one is the reduced stress and healthier relationships. So as I said at the very beginning, quite often these money problems can cause stress in your life, and then that stress rolls over and it gets projected on other people. So you want to make sure that you avoid debt in the first place, but if you do have it, you want to have a solid plan. Let's look at some of the cons, so the downside. Debt consolidation is not for everybody. It's not a silver bullet. It's not going to fix every problem. It can have some upsides, but as with everything, you need to make sure it's the right product for you at the right time. So, here are some of the cons or the downsides of debt consolidation. It can cost more in the long run, especially if you have not done the math. I keep stressing that. Do the numbers, crunch the numbers. One of the things that I love about my job is I work with numbers, and numbers are numbers. And if you are looking to get solutions and you're truly looking to be objective about what you're looking at, the numbers will give you the answer. The numbers will tell you if debt consolidation is the best thing for you. The risk of reaccumulating debt. As I said, if you don't fix a bad relationship with money, debt consolidation is just going to delay the inevitable, which means you'll clear things up for a while, you'll continue to overspend, live beyond your means, and you're just going to end up with more debt. If secured against your home, then your home could be at risk. This will be one of the things that's explained to you if you come to me or if you speak to a mortgage broker about debt consolidation, either through a further advance or through a remortgage. We will stress to you that it is a second charge on your property. And therefore, if you don't keep up your monthly repayments, your home will be at risk. It's not suitable for everyone. So specialist lenders have strict criteria. We will be talking about specialist lenders and why, if you wait too long, you may end up working with a specialist lender as opposed to being able to go right back to your current lender and doing a further advance. Start the conversation early. I'm in the process of writing a new book called Wait Till I Get My Money Right. And part of it is about the fact that before you enter into a marriage or a serious relationship, you should be talking about finance because this can be something that will cause unnecessary stress. And you may be coming from two different worldviews about money. It's good to have the conversation very early. So, debt consolidation, when used correctly, can be a lifeline, reducing stress, saving money, and even protecting relationships. But it's not a magic fix. The key is early action, honest conversations, and professional guidance. So when my wife and I were getting married, we did actually two marriage preparation courses. And anyone who's in a serious relationship, I would recommend it 100%. And one of the things that we were told by the people that facilitated the course, they were like, any other big decision you make in your life or profession, you have all this training, you have all of this counseling and advice before you do the thing. You even have ongoing professional development. But the biggest decision potentially that you're going to make in your life, which is attaching yourself to another human being, another imperfect person, some people do not go and get marriage counseling or do couples type of pre-marriage conversations. I would say if you're considering starting a relationship, a serious one, you're getting married, you're moving in together, whatever, make sure you have the conversation around debt. It is one of the best conversations that you can have. If you're considering debt consolidation, seek advice from a qualified mortgage or financial professional before committing. Making smart choices today can save you money, stress, and maybe even your marriage. If you and your potential wife or husband have this conversation early, you know what you're getting into. It doesn't have to be that thing that you're hiding from them or they discover and it causes an argument. Here are some practical tips for anybody on how to avoid debt. So, the best thing you can do is avoid debt in the first place. Then you don't need to do a debt consolidation loan. So, live within your means. I grew up in a West Indian household, and this is one of the things that my grandmother told me all the time. She came from a generation where they didn't borrow money, they did everything in cash. We don't live in that world anymore. However, you should live within your means. You shouldn't spend more than you have. A credit card is a loan. So some people say, well, I have the credit limit, therefore I'll use it. That's not the best approach. You should always, if you are using a credit card, which I don't discourage, by the way, clear the balance every month. There's a myth or a really misguided thing that we do with young people, especially older people who have run into problems with their finances. Like, don't get a credit card, avoid credit cards. I always add this caveat: get a credit card, however, pay it off each month. And if when my daughter's ready to go to college or whatever, and she's not going to be in the home and she's offered all these credit cards as part of going away, I'll say, get it. But the statement comes here because I want to see what's going on with it. I want to make sure that it's cleared every month. This is important because it gives the young person the opportunity to build a credit profile, understand how money works, and understand how to have a good relationship with money rather than reaching a point in their life where they've never had to deal with it and they haven't had any guidance. Build an emergency fund. So even a small buffer helps. Different people will tell you different things, but if you can be in a position where you have 3 months worth of bills and salary in a savings account, that's a good start. You should have a buffer that if you hit a bump, if your car breaks down, if you need to replace a roof or whatever, you're not going to be in a position where you end up missing payments or being unable to manage your payments. Track your spending. You should budget. You should do an annual budget. You should review your income and your outgoings, check your bank statements regularly. And you know what I'm going to say now, because I say this in every video. You should check your credit report at least once a year. I would say twice a year, but at least once a year when you're doing your annual budgeting. Look at what's going in, look at what's coming out, look at what the credit profile looks like. So those are some practical tips on how to avoid debt. Here are some more practical tips on how to avoid debt. So limit your credit card use. Avoid using credit cards for daily expenses. As I said, that can be a good strategy if you're really disciplined. I have various credit cards that give me cash back or give me air miles or just help me manage expenses. Every month, those credit cards are cleared. So it actually benefits me. Plus, you get additional consumer protections by using credit cards for various things. But you have to be disciplined and you have to make sure that it's part of a strategy to put you in a position where your finances are operated and run well. Plan for big purchases, save first, borrow only if truly necessary. So buying a house is something that you can save for the deposit, but most people aren't going to be in a position to be able to buy a house cash. So you're going to need a mortgage, but plan. Make sure that whatever you're saving for the deposit, you also have money for the other fees, the solicitor, the broker, some money left over that when you move in, if you find out that you bought a house that the boiler was about to go out and they didn't tell you, you can replace the boiler. So plan for big purchases, communicate openly. If in a relationship, share financial goals early. So as I said, if you have this discussion before you even get married and you set some guidelines around your finances, it will make it a lot easier, especially if there's transparency, shared accounts, and you talk about this regularly when you do your annual and quarterly budget as a couple. I talk a lot about finance, and I've written a book called A Mortgage is a Really Big Loan. The book is not just about mortgages, though. The book is about finance. It's about financial literacy. It's about debt. It's about estate planning and wills. If you have recently moved to the UK, or if you know someone who is just starting their career, it's a great book to give them the foundation that they need. Or you might be like a lot of people who, you're a social worker or you're a plumber and you're great at what you do, but this is just not your area. This is a great book. It's available on Amazon. It's written in a very approachable way. It's not a technical book. It's written the way that I speak. So it's like having a conversation with me. I've been in finance for over 30 years, and I'm sharing my information in a way that you can understand and you can implement. As I said, it's available on Amazon, and I would really appreciate your support by purchasing one for you and maybe one as a gift. If you need a speaker for an event, so if you're doing an event and you need a keynote speaker, a panelist, or a host, why not consider me? I do these videos to share my information, and hopefully it's established that I know what I'm talking about. There are several areas that I talk about. I talk about financial literacy, as I am in this video, and I have my book, A Mortgage is a Really Big Loan. I also talk about business operations. As someone who's been an assistant vice president at Citibank, I understand business operations. I have a book called Business Mastery for Startups and Side Hustlers. If you need a speaker and you need someone that can talk through business operations, startup, I'm your guy. And as you know, I'm a little bit of a chat GPT geek. So I do have a book about chat GPT and chat GPT prompts and how to use them not only in your business, but in your life to give you back more time that you can have a better work life balance. You can connect with me on LinkedIn. I love speaking at events. I love supporting communities, churches, young people, and I have a special and really high passion for helping men be the leaders in their home and making sure that they leave a sound financial legacy for future generations. So the booking link can be found on my LinkedIn page. You can always reach out to me. As I've said, debt consolidation is not for everybody, and it might not be the solution for you. I'm not sharing this information to talk you into doing debt consolidation. I'm just sharing some signs that you might need it, some signs that you might be slipping into debt, some do's and don'ts, pros and cons of debt consolidation. But here are some alternatives. Seeking debt advice. So charities like Step Change, Christians Against Poverty, or Citizens Advice can guide you. In many cases, you will find mortgage brokers like myself who have experience in debt that can talk to you, but it's good to speak to a specialist, someone that understands debt. So refinancing or further advance, adjust your mortgage to release funds. This is a case by case thing. You need to make sure that you have enough equity in the property, you have a solid plan, you check your affordability, and you're dealing with a professional who's not just trying to sell you something, but instead is trying to make sure that your financial future will be better by doing the debt consolidation. A debt management plan, or DMP, it's an informal arrangement to pay creditors at a reduced rate. Do keep in mind, if you do enter into a DMP, it can make it harder to get mortgages or remortgages. So when you're having the conversation, think about the long-term impacts. Balance transfer on credit cards. I hear people talk about this all the time. So you can move high interest debt onto a 0% interest short term. So let's just say you have a credit card, it's got a balance of £3,000. You're paying it every month, and then you get this offer in the post for a 0% transfer to another credit card. Once you've crunched the numbers and seen how much the balance transfer fee is, set a plan on paying that off within the 0% term, because you will find that the reversion rate, or the rate that it goes to when you come out of that 0% window, can be quite high. So when you add that and the transfer fee, it can actually put you in a worse position. But it is something to consider if you've done the math. Snowball or avalanche method. This is something that Dave Ramsey talks about a lot, and a lot of debt consultants talk about. It's an opportunity to pay off one debt, and then you move on to the next one and move on to the next one. But this tends to be for people who have the additional income and have the discipline, because if you're able to do this, this means you're making more than you're spending. It's just that you're going to have a more focused approach to how you do it. So those are some alternatives to debt collection. When a specialist lender can help. So I've talked about specialist lenders. Specialist lenders are lenders who are reputable companies. These are companies that can do mortgages or loans for people with maybe some issues that aren't as straightforward as computer says yes or computer says no. So you might have a high debt to income ratio. Main Street banks may decline, but specialist lenders assess on a case by case basis. So what is a high debt to income ratio? So that means you make £50,000 a year, that's your salary, but then you might have £35,000 worth of debt. That's really high. It's not saying that you're missing your payments. It's not saying that you have any late payments. It's just saying, based on how much you make, how much you owe is really high. Lenders do look at debt to income ratio. That's why when I talk to people about credit profile, I stress that it's your credit profile, not your credit score, because your credit profile takes into account things like debt to income ratio. Have you had any late payments, missed payments? A specialist lender can also help if you have credit issues. So late payments, defaults, CCJs, a specialist lender can look at those things and consider your application. So those are some reasons why you might end up with a specialist lender if your original lender was unable to do a debt consolidation loan for you. As someone who has dealt with people who are dealing with debt, late payments, CCJs, defaults, pending repossessions, it can feel lonely. You don't want to open your mail. You don't want to pick up the phone. It's a really horrible, dark feeling place. But don't go into isolation and don't ignore the phone calls. Don't not open the letters. As someone who's worked in debt collections for over a decade, I will tell you, despite what the TikTok videos will say, banks aren't out to get you. They're not trying to put you in debt, and they're not trying to take your home. They do want to help you, but they can only help you if you speak to them. Every bank that I've ever worked for has a department that's set up specifically to support people that feel that they may be having problems or are having problems currently. The worst thing you can do is ignore the calls and ignore the letters. Because guess what? They'll keep calling and they'll keep sending letters until they reach a point where it goes into legal action. So have the conversation, explain the situation. They are there to help you. Be realistic, be honest, and you will find that the calls will reduce, the letters will reduce because you'll have some type of payment arrangement with them, and they'll understand the situation and they'll be working with you to help resolve the situation. I know it can feel like a lonely place, but no matter how overwhelming it seems, there's always hope and light at the end of the tunnel. You might say, Anthony, you're just some guy on YouTube. You have no idea what I'm going through. Trust me, I've heard pretty much every story in 10 years of talking to tens of thousands of people, both in the US and the UK. The key is to take action because even small steps forward can change everything. So just picking up that phone call, opening that letter, and responding to the invitation to the conversation with the creditor can make a huge difference. Trust me. Debt don'ts. So these are, well, actually, these are debt dues. So these are things that you should do. So debt dues, things that you should do. Be proactive. Act early before payments are missed. Don't always think, oh, well, money's going to fall out of the sky, so I'm not going to do anything now. Do whatever you need to do early. Have the conversation early. So do be proactive. Create a budget, track your income, outgoings, and debt repayments. So be proactive. Be honest with yourself. Don't bury your head in the sand. Understand what your financial future looks like. Even if it looks grim, by understanding it and being proactive, you can make the positive steps that you need to make sure that you don't end up in a situation where you have few or no options. Talk openly with your partner, your family, and a financial professional. Have the conversation. The conversation will feel like, oh, it's so embarrassing. I don't want to do this. But definitely you will feel better and you'll be in a better position once your partner knows. Because if it's something they don't know, then you're carrying that around, you're hiding, you're rushing to the mailbox to make sure that they don't see that letter. If you speak to a financial professional, they'll help you come up with a plan. It can take 3-4 months to get into really bad debt. It may take 4 years to get out of it, but you need a plan. So speak to a professional. Prioritize the essentials. So housing, food, utilities come first. So when you do an income expenditure report, so if you do speak to someone about debt, they're going to have you fill in an income expenditure report. They'll prioritize the things you have to pay. And then there'll be other things that they will say, well, these are things that need to be paid, but they're not as high priority as your rent and electricity. Seek professional guidance from a broker or debt charity. The videos that I make are not designed to replace speaking to a professional. They're to open up the conversation that when you speak to a professional, you can understand some of the concepts that they're talking to you about. I'm not giving financial advice, legal advice, or tax advice, but I am advising you if you are struggling with your debt to speak to a professional. Debt don'ts. So things not to do. Don't ignore the letters or calls. Problems only grow if left alone. So I've been there. Trust me, I understand. I've talked to tens of thousands of people in this situation. You think that, oh, this person is going to judge me. This person's going to put me down. They're not. They're there to help. Not answering the calls, not opening the letters just will generate more calls because it's an automatic dialing system. And every time you don't pick up, it just reschedules the call. But when you have the conversation, what you'll find is they'll usually put a hold on the next call. It might be 7 days, 10 days, it might even be a month. There are regulations around debt collections. And if they've talked to you, they can't just keep calling you. So make sure you have the conversation. When you get a letter, open it and action it. Don't borrow to cover daily living costs. It's a warning sign. Don't rely on minimum payments. Balances barely reduce. We've talked about that. If you're just making your minimum payments and that's all you can afford and that's all you'll ever be able to afford, then you need to speak to someone potentially about a debt consolidation loan. Don't hide debts from your partner. Be open, be honest. It can be hard, but if you start the relationship by laying everything out on the table, it will make it easier as things progress. Don't assume consolidation is always the best answer. We've talked about the pros, we've talked about the cons, we've talked about the do's, and now we're talking about the don'ts. So make sure that you weigh the pros and cons, have a meaningful conversation with a professional. My name is Anthony Lindsay, and hopefully you found this information very helpful. If you know someone that is struggling with debt, or if you're struggling with debt, or if you just have a community where you can share this video, that you can get the information to people that you may think everything is fine with, please share this video. I don't make these videos to replace speaking to a financial advisor or to give financial, legal, or tax advice. Instead, I want to open up conversations. I want to share information and hopefully, especially when it comes to debt, remove the shame, remove the isolation, because that's how it feels when you're in debt, especially when everyone around you thinks everything is fine. Don't hide the information from your partner. Have the conversation. Get the help you need early. Don't wait until it gets too late because it will limit your choices and the resolutions will either take longer or cost more. I appreciate you watching. If you enjoyed this video, make sure that you like, make sure you subscribe, and make sure you leave a comment. When you subscribe to this video, it tells the YouTube algorithm that the information that I'm providing is useful and is helpful, and people want more of it. My name is Anthony Lindsay. That's my booking link. If you need to speak to me about a mortgage, you can reach out to me. I can help you with debt consolidation mortgages, remortgages, commercial bridging, anything that you need. I will always put you as the customer first. I'm not here to sell things. And I want to make sure that you always make informed choices that are what's best for you and your family.